Good morning, everyone. This is David Blair, the Crosshairs trader. I trust that you had a wonderful evening and trust that you will have a wonderful day today. Nothing really has changed since our last couple of reports, and that's good. That's a good thing. That's what we're wanting. As I've been talking about in the last few days, we've been wanting a consolidation after a big move up that we've had off some support levels. And hopefully we're breaking out of this range that we've been in all of our markets. This is the S&P futures here. But where traders, amateur traders, lose money is right here. And what I mean by that is when we have huge up days and then a down day and then an up day and then possibly today a down day. Traders get excited with their emotions here and then doubt themselves here and then get excited again here. Much like yesterday, the market was down about 60 or 70 points or so on the Dow, closed up about 40. It was easy to get excited, oh, the rally is going to continue. Whereas for me, the way I look at it is there's going to be intraday swings and a lot of movement and a lot of jostling about and a lot of arguing over which way this market ought to go. There's still bears who are going to want to try to take it back down, back into this range again. There's bulls that are going to want to be taking it back up. So until that decision is made, there's going to be a lot of consolidation. So what I'm looking for is more slowdown, more of a rest. Let's take a look at it as joggers running a marathon. They've run about 26 miles. They don't want to start running 26 miles again. They'd rather wait, sleep a few days, have a few good carbohydrate rich meals, just load up, get ready for the next move, if indeed that's what's going to happen. So, I'm welcoming this. I really want to see this. It will lower my risk for potential up trades because I know that if we can rest, we can then start having these moves higher that I'm looking for, and I'll be more confident in my up trades. At the same time, as Crosshairs traders during our weekly hour-long webinars, talk about potential down trades as well if indeed the market wants to go back down into this pattern, which will just frustrate even more market participants. But be careful in this area. If you're in any long positions, they're probably going to consolidate some with the market. You don't necessarily need to be scared out of them. Just be aware of where we are in the general market and the consolidation. Don't necessarily want to buy any new positions right now, and do not want to enter any put trades or short trades. That's simply my analysis in looking at it. So far it's been working the last few days, and I would love to see it continue to consolidate to move higher. That is the bottom line, and that's what I'm looking at. That's my story, and I'm going to stick with it. Here's your NASDAQ futures. Some major moving averages have now crossed, but we do not trade just because these have crossed. In fact, when these cross, this is the time that I look for it to pull back first. Confirm that these moving averages are indeed giving us another bullish buy signal. So I'm going to wait and be patient and continue to let this consolidation continue. I know I'm getting redundant, but I'm trying to hammer in a point. Here's our NASDAQ composite, same thing, needs to rest. The Dow, you can see it's potentially at a resistance area. Nothing has changed. Let's see it break through. Then from our weekly chart, I have my moving averages here on my daily chart. From my weekly chart, we've got some more resistance up here and then the high of the year. So we've got a lot of work to do, particularly in the Dow. New York Stock Exchange Composite Index, same thing, some resistance. OEX, which is the S&P 100, has now found support and is consolidating with the general market just as we expect before it possibly goes up another 20 points or so. The Russell trying to break out of this resistance area, so I've gone ahead and drawn this line green for a potential breakout, but I still think we're going to consolidate for that next move up. S&P finally, and then I'm going to talk about one ETF that goes along with that Russell. Here's the S&P potential resistance area here that goes back to the January highs that then rolled over. So we do have some more resistance here. Again, consolidation is the word, rest is the word. The one particular ETF that I want to look at is MDY. That's your Russell. Your mid-cap depository receipts. Your mid-cap ETF. Again, setting up for a nice trend if this market decides to continue to move up. Like to see it consolidate a little bit for that next move up. That's about a $5 move, and then it could head up into the year high back from April. But again, consolidation, our moving averages are starting to line up where we want them to, and if all of this works, we're going to have some wonderful opportunities, not only on MDY, but us Crosshairs traders are looking at a couple of dozen of beautiful charts that are setting up that if this market's going to have a year-end rally and we're going to continue this trend and break out of this consolidation, there are many opportunities awaiting us. We just have to patiently wait, let the market confirm that for us. On the downside, we do have a few potential trades that the market decides to roll over. You're welcome to join me anytime at my blog, thecrosshairstrader.com. Sign up for my RSS feed, email, or Twitter. I post at least one post a day, or try to, freebie. And then if you're interested in any of the premium services, would like to join one of our members-only webinars, I'll be glad to send you an invitation. Please let me know. Contact me at david@thecrosshairstrader.com. Go make it a wonderful day inside the charts or outside. Either way, make it a wonderful day and make it your day.